And now I would like to invite Mr. Shahid Rasul, the Deputy CEO of OMINVEST.
Assalamu alaikum. It's my great honor to be here today with you and represent OMINVEST. Today we will talk about investment ideas and perspectives and try to answer a few questions. I hope I'll leave you with a few thoughts at the end. If not, maybe a few more questions to ask, which I think is not a bad idea. So I'm just waiting for the pointer. Oh, I see it right. Yeah. So the first question is that how do you create value and build a sustainable and durable business during a long economic downturn? The kind of downturn we just had in the Middle East in the last 3 to 4 years. So that seems a relevant question. I hope most agree. Well, the experts and the gurus, they have some recommendations for us. What to do in an economic downturn to deliver and achieve this. They say, focus on your core expertise, your circle of competence. Do what you know best. Okay? Then they say, get into a consolidation mode, meaning do mergers or acquisitions, whatever suits you the best. Get into operational efficiencies, cost cuts, innovation, and being resilient in a downturn. And synergies, top line, bottom line, expense base, cross-selling, different ideas. And one of the most important things they talk about is building smart teams during a downturn. You know, in a downturn, it's much easier to attract talent at a reasonable price. And then diversify. Diversify to the extent it makes sense for you, given your business model and the nature of your operations. There might be more ideas to talk about, but let's just quickly focus on these and see what they mean. I actually wanted to talk about, to answer these simple questions, I wanted to share our own experience at OMINVEST. What we have done, being one of the largest companies in Oman and the region, what we have done in the last 4 years. Well, let me share with you a few quick examples. First of all, we as OMINVEST itself, we merged with Onyx Holdings, which was one of the largest investment holding companies in Oman, in 2015 as oil prices were sliding. And the outlook was getting tougher by the day. We did that merger with Onyx Holding to be able to become bigger, better, and much more diverse. We accomplished that target in 2015. Then we shifted our focus to our subsidiaries and associates to be able to see where we can help. Well, I will begin with the insurance sector, where we own a number of companies. We doubled, actually more than doubled, capital to our largest subsidiary, National Life, during the downturn, which was 2016, to enable them to do bolt-on acquisitions and also accelerate their organic growth across the region. National Life did just that. They more than tripled their profitability during the downturn, last 3 years, and also went public in 2017, very successfully, at a valuation of about 85 million Omani riyals. In the leasing sector, where we own a couple of investments, we merged our 2 largest leasing companies to combine into one to make it the largest market player with a 40% market share. And also, during the downturn, we improved the KPIs of the business, right? Like margins, return on equity, capital structure, during the downturn and during the merger process. In banking, we own several investments, and actually during the downturn, we built equity stakes in other blue chip companies in the region, in Oman, and also enhanced operations at our subsidiary, Oman Arab Bank. Again, during the downturn, last 3 years, we set up a specialized platform, our subsidiary called ONIC, to make new investments into growth sectors, education, food, healthcare, logistics, and others. We also set up investment banking platform U Capital, which is led by Luai Bataina, who was here a moment ago. And at the end, in real estate, we accomplished one thing, which was building our new head office called OMINVEST Business Center, worth about 16 million real project during the downturn. One of the benefits of doing a big project during the downturn was that we incurred much lower cost than we would have during the up years. So, what all this activity meant for us? What's the result? We were able to almost double our revenues in 3 years and became much more diverse, the objectives we wanted to achieve. During the downturn, we also secured an investment grade rating, BBB with a positive outlook. They say the market decides. Market decide means the proof is in the pudding, right? So during this time period, last 4 years, OMINVEST stock went up almost 80%. When the market was down, the local market was down almost, I think, 14%. So that's an annualized 17% return. Not just in Oman, we also did very well in the region. If you look at all other major financial firms, investment banks, investment companies, OMINVEST returns were a standout, which was the result of all the initiatives during these difficult 3 years. We also stayed focused on our KPIs. Our market cap, we are one of the largest in the region. Our cost to income ratio, one of the lowest. Our leverage, somewhere in the middle. We have the capacity to increase much more. And our return on equity, one of the highest in the sector. So the point I'm trying to make is that you can do a lot in difficult times, in down years. For us, the journey has just started, and we think it's a work in progress. Well, this covers part A of my question. Now I want to talk about where we see the markets. If you look at the oil price, which went down to $29 per barrel in 2016, first quarter, it is up almost 150% over the same time, over the last almost 2.5 years. I remember I was in one of the other forums in 2015 and then in 2016, and a lot of people, experts, they sensed this will never recover. And then there were some wise people who really invested big time into the regional blue chip assets in 2015 and 16, and somewhat also in 2017, and also in global energy assets. The best time to buy oil and gas stocks globally. Markets go down, they go back up. My take on oil is this, that the oil is going up because global inventories are going down. US inventories are falling, and OECD inventories are falling, plus China and India, they are consuming a lot more. One lesson I would like to talk about is from US oil companies. Just look at the first graph. Their break-even was almost $80 per barrel. And in these 3 years, US oil companies, they cut their break-even by almost 30 to 40%. Now they are profitable at 55 in US shale. And in US Bakken, they are profitable at $39 per barrel. This is what I mean by operational efficiencies during the downturn through cost cuts and innovation. So that's our take on oil. And they continue to produce more because they're much more efficient today. They are gaining back the market share. Now let me talk about what's happening in the interest rate market, because interest rates, they define asset prices. The 10-year yield has been declining for the last 30 years, but now it seems they are bottoming out and beginning to rise. Much more troublesome is the increase in short-term bond. Their yields are accelerating and spiking. You see the chart. And it has negative implications for every market, every asset class. As a result, the GCC interbank rates are spiking. What's happening with the short-term bonds? It's affecting the GCC rates, which are spiking now. And so is Oman interbank rate, which has gone up from under 1% to over 2% in the last few years. So what does that mean? When the bond yields rise, something has to give away, right? When the bond yields and the equity yields are together, or very close to each other, either bonds have to rise or stocks have to fall. And we think, given where the markets are, stocks could fall. Markets are at a multi-year high, especially US and Europe. And even Middle East is now recovering because of oil prices. You can make your conclusions, but it seems something has to give away. Either stocks or bonds. I think stocks. Well, now, I would like to talk about what's happening in the Middle East. What has happened in the Middle East in the last 5 years and 10 years in terms of investment ideas? If you look at what has worked in the Middle East in the last 5 years and 10 years, you will notice that consumer logistics, healthcare had done very well. All major companies in these sectors, regardless of what happened to the oil prices in the last 3 years, they've done very well. But there are some other big sectors, the traditional sectors like petchems, banks, cement, real estate. They have lagged behind. And they also suffered big in the downturn. This is a big clue to how you can asset allocate for the future. Where you think you should be allocating more capital, given the long-term trends. For instance, I'll show you a few examples. We think that for growth and diversification, you could focus on, perhaps, on these sectors. Healthcare, education, consumer staple, food, basics, fintech, e-commerce, logistics. Let me quickly show you what's happening in healthcare and education sectors in GCC today and for the last few years? Well, you know, healthcare, Saudi Arabia and UAE are the biggest markets, then Oman and others, and they have a lot to go up. The expense is just 3% of GDP, so there's a lot of room to catch up with the global average. Plus the population dynamics, aging population and the young population is growing. Therefore, the demand for healthcare will continue to rise. In this situation, every market in the Middle East is growing. For this sector, between 11 to 13, 14%. And I want to highlight one standout player, NMC Healthcare from Abu Dhabi. You can see the company has grown multifold in the last 10 years, including 2015, 16, 2014, 2017. No matter how you look at it, they've been in a secular uptrend, expanding their businesses, portfolios, acquisitions, and their stock price is up almost 18 times. And profitability is almost 40 times in the same time period. And it's happening in the Middle East. If you look at education, we have one big, large player now, which is going for IPO, GEMS Education. Very similar to healthcare, you will see they continue to grow every year, including the last 3 years, because there's no slowdown. This is the supply and demand dynamics in these sectors. So now let's turn to the global investment ideas. I want to show you the performance of the markets, equities, bonds, and real estate globally. You will note that S&P has done very well, up almost 130% in the last 10 years. Real estate is less than half the performance of equities. And bonds are way behind. Last 2 years, 5 years, 10 years, no matter how you look at it, it tells you the clear winner. If you're a long-term investor, you've got to be in equities. But what kind of equities? Which sectors? Okay, let's look at it. If you compare S&P with NASDAQ, which is all technology stocks, you will see that every year NASDAQ has beaten or outperformed S&P every year. This could be a good track record and justification for a future forecast, that technology stocks will continue to outperform the broader market. But the next question is, what within technology? What exactly you need to own within technology? There are tech heavyweights, I call them, like Apple, Google, Amazon, Netflix, Oracle, Microsoft, Samsung, and other similar top global heavyweight tech stocks. They beat even the NASDAQ with a wide margin. If you look at the chart, the red line shows how widely they are outperforming the NASDAQ market, which itself is outperforming the S&P 500 every year. Right? So these are the trends in global markets: equities, bonds, real estate, S&P, NASDAQ. Within NASDAQ, we have the tech basket. These are the names and the stats on each bonds, on each stock I talked about. So, what makes them such a star performer? These companies. When I look at their return on capital, is very high, in the high 20s and 30s and even 40s. Their leverage is very low. Their valuations tend to be high because they are growing faster. Their cash positions are strong. Net margins, very high. Growth is superior, stable. And very important factor, management teams, which tend to be very innovative. These are the hallmarks of highest quality companies in the world. So when you allocate your capital, you can look for these attributes. I want to also highlight one recent major shift in global investing with the launch of SoftBank's $100 billion tech fund. And you will note from the chart that 50 billion is coming from the Middle East. It tells you how bullish are Middle Eastern investors on global technology investments. Almost 45 coming from Saudi and 15 from Abu Dhabi. I also understand that Oman Investment Fund has launched a $200 million tech fund. So it tells you everybody is inclining towards participating into global tech investments, which I think is a good area to be in for the long term. In terms of ideas, if you're a long-term investor, your portfolio could be, based on your specific risk-return profiles, could be maybe 50% technology, healthcare, consumer services, and some industrials. You could range the asset allocation between, let's say, 30 to 70% for technology, given your risk appetite. If you are a healthcare expert, you can be 80% in healthcare. These are all growing areas. They are less cyclical, more secular growth over the long term. Now, let me conclude my presentation with one slide, which also defines OMINVEST. This, in a way, is our entire investment philosophy and investment criteria. If something comes through our doors and we're looking at investments, it's very simple for us to decide what we've got to do. We call this our philosophy or parameters. So we are focused investors. We do few large investments we understand very well. We call that circle of competence. Focus on quality businesses with cash flows, good management teams, and superior growth potential compared to others. Diversification to the extent you need, whether you think 15, 20 large investments will be enough or you want 60, 70 investments in the portfolio, right? We prefer fewer, larger. We tend to be long-term, meaning 10, 15, 20 years, maybe beyond. The most important variable in this page is valuation discipline. When we get in, and I think the last 3-4 years have been ideal for us, investing in the downturn, buying quality assets across sectors in the region and also outside. And to control your destiny as an investor, always keep modest leverage. So you're not at the mercy of the bankers, and work with smart people. My friends, these are a few ideas and thoughts I wanted to share with you today, which talk about who we are, what we do, and how we do it. Thank you very much for your time. I appreciate it. Thank you.